Hi everyone, my name is Crosby Elliot. I'm a senior associate at Cody McCarthy. I wanted to take a minute to talk about estate taxes and what that means in terms of how to calculate whether or not the estate is going to be subject to a tax. Generally speaking, in Massachusetts, an estate can be subject to an estate tax if the assets of the estate are over $1 million. There could be a federal estate tax that's due if the assets of the estate are over $11 million. The question becomes is, what does the word asset actually mean? In short, it means basically everything. What the Department of Revenue or the IRS looks at routinely is just to determine the assets that were owned by the person who passed away on the day they passed away, and that ownership can be either directly or indirectly. So essentially what that means is it can include a whole array of assets. It can include your checking account, savings accounts, any CDs that you may have, retirement accounts, life insurance policies, real estate, annuities, pensions, if you have valuable furniture or artwork or cars or clothing or jewelry. Think of it as a whole wide net that is cast, and all they're looking at is what assets were owned by you either directly or indirectly on the day you passed away. If those assets reach over those filing thresholds, then we have to prepare and file an estate tax return and pay any sort of estate tax that's due. We routinely prepare these types of returns and help clients administer the estates of loved ones. So if you have any questions regarding the estate tax or whether or not your assets will qualify your estate for an estate tax, please give us a call. We routinely help clients minimize or reduce or completely eliminate any sort of estate tax that's owed. So it's good to get ahead of the problem so that you're able to maximize the amount of assets you're passing to your beneficiaries.